And then we're chugging along here. This is the sixth and last one. That has to do with the actual contributions you can make towards various retirement accounts. What does that look like?
Yeah, and it just depends on how the retirement accounts are set up. For business owners and folks who own real estate and have entities, there are a number of different options. And so I just actually mentioned one earlier called a mega backdoor Roth. So some of the, of course, setting up qualified retirement accounts for employees can increase retention. They're expected now. But there are a couple of line items within provisions of those qualified accounts, traditionally 401k, 457, 403b. And if you put in things like in-service distributions and post-tax contributions, you can actually contribute, as a business owner, to employees up to about 50. I believe last year it was 56,000. This year they give us about an extra $500 every few years, so it might be 57 and 500. But you can technically contribute that much and offset that tax burden, whether it's to the employees and then also in your own accounts as well. So that's one option. For the more solopreneurs, there are some strategies to consider, similar to perhaps a SEP IRA, where the contribution from the company is pre-tax. You are taxed on the back end, but you get the write-off now and the limit on that again is 56,000. And those can actually be funded up until about October if you file an extension. So that's the one opportunity there, that you can make that election for the prior year up until October. So there are just a lot of opportunities within the actual retirement accounts that exist, that should be optimized and make sure that folks are getting every deduction that they deserve and they want, based on the structure of their entity.